So what's up, guys? I actually want to give you a strategy that has to do with trend line. You see, sometimes when I trade, I'm not rigid in my trading style. That is one thing that a lot of people don't know. So if you're asking me, oh, is this your style of trading? Can you come? There are times that I implement certain things that I will not tell you. Okay, there are so many things. Sometimes I will just ignore certain picture. I will just ignore certain things and try to implement certain things. Sometimes I put trend line in my trade. I use trend line. And the reason why I use trend line is because sometimes when I want to enter a trade and I want a candle confirmation, I'm talking about candlestick confirmation, I will use trend line because I know before the trend line breaks, I'm going to see that candlestick confirmation. So the reality is that if you use trend line in certain way, I tell you, you'll be very profitable. Very, very profitable because it's something I've done many times and something I'm still doing once in a while. And sometimes when it is not necessary, I don't do it. So in this video, I'm going to show you how to combine this trend line strategy actually has to do with price action too. So you are going to combine price action and trend line together in this strategy. It's a very powerful one, and I believe if you watch this video to the end, you are going to learn a lot. So let's go to my computer screen and let's dive into it. Okay, but before then, please, if you are here to subscribe to this channel, subscribe now. Subscribe because you will learn a lot from this channel. Learn a lot from the channel. And not only that, like the video and share to your friends. If you want to take my course, the link is in the description below. Everything about my strategy, everything you need to know that can change your game. Profit street trading strategy. The course is the course is down below and it's very cheap. So you don't need to worry about the money. It's very cheap. So you can check it out and buy and change your life forever. Okay. And if you don't feel like buying my course, and if you want to have one-on-one, want to see me live, if you want to if you want to have words with me, if you want to how am I going to put it, if you want to learn directly from me, if you want me to mentor you, then you have to check my bio. You will see my Telegram link there. Just join the Telegram group channel and then send me a DM. Okay, I will attend to it. So so let's go to my computer screen and get down to it. Okay. Okay, so let me show you what how the strategy, and let's just let me just show you what I mean. So okay, if you, let's say you have something like this. Okay, let's say you have higher high, higher low, higher high, higher low, higher high, higher low, higher high. Let's just do this. Okay, let's say you have this and you decided that, because if you want to use trend line, one thing you should understand that it is only best to use trend line when you have a trend, either an uptrend like this or a downtrend. Let me show an example of a downtrend. I believe a lot of you know already. Lower low, lower high, lower low, lower high, lower low, lower high. Okay, this is an example of downtrend. Okay, so let's say you have, if you are going to use trend line, you should make sure that you have uh, a trend. That's the first thing you need to do. Now the second thing you need to know is that when you put a trend line like this, for example, when you put a trend line, okay, trying to make this as perfect as I can. Let's just put it like this. So let's say you have a trend line like this. One thing you need to understand is that you shouldn't take the trade when the trend line breaks. Okay, because this strategy has to do with trend line breaks. So if the trend line should break like this, don't take the trade, because what happens is that when a price that has been bullish like this, when a price that is bullish like this, such price, when it's about to change, you don't expect the price to just start dropping down like that, like drop down. It's not possible. What happens is that when the price breaks like this, expect a turnaround back, likely into this. There are two places the price will likely retrace to. The first one is to this point. Hold on. The first point is to this point. The second part is to this point. So these are the two areas where the price will retrace to if the price should come down like this. 99% of time, the 99% of the time, the market will trace back to this place or this place. Don't expect the market to just start going down like that. No, price doesn't move like that. It moves in a wave, and price will surely show some struggle. You don't expect all the buyers that got to this point, all of them to just get out of the market straight away from here. And you don't expect price to just overwhelm them straight away and the price will start selling. You don't expect sellers to overwhelm them here, just started selling immediately. No. So you are still going to see the buyers pressure around here. So you expect a retracement back. So if you express that retracement, two things are likely to happen. Let me remove this so that I can show you. So this is what you are going to see. You are going to see something like this. Where is it here? Okay. You are going to see something like this. Let's say the price traces down here, something like this. Okay, something like this before we have this downward move. Now, my fellow traders, when the market retraces here, what do you see? You see head and shoulder pattern. This is price action reversal pattern. This is what happened when I'm coming. This is the first shoulder. This is the head. This is the second shoulder. Okay, so when you this is the first thing that is likely to happen. The price retraces to this point. How do you know if you are going to enter here? That is when you need to understand candlestick patterns. I think I said I'm going to make some candlestick video on candlesticks. You have to check what the candles are saying here, okay, before you take your entry. Now, the second thing that is likely to happen is this. I need to remove all this one, so give me some minutes to do that. Oh, sorry. Okay, so the second thing that the price is likely to do is after retracement like this, it's likely to come back here and touch this place before finally come down. Okay, so two things you need to do. So now, if you look at the price, what do you see? Double top. Okay, double top. So you have to imagine, you have to do that. And sometimes the price will not get there, maybe around here. It still don't matter. This is still head and shoulder pattern. You can see the shoulder doesn't need to be of the same height. Okay, it may still come here, so it's still head and shoulder pattern. So now the question is this: when exactly should you enter the market? So don't enter the market after it breaks. Enter the market after the retracement. Okay, either it retraces to this point or it retraces down to this point to come and touch the to this support resistance, which also align with the trend line. That's when you should enter. Because if you should enter immediately the market breaks, imagine you'll be managing a huge stop loss. Let's say you enter here, your stop loss at least should be above this resistance. Okay, so look at the kind of stop loss you have to manage. And imagine if the market is tracing the drawdown, the emotion that will place in, you may not want to hold the trade and just get out. So that is why you need to wait after the breaks. You don't just enter. Wait for price to give you these price action patterns before you enter. Either it retraces to help you form what is called head and shoulder pattern, or retraces to this point to form double tops. Then you look for a candlestick that confirm an entry, and then you enter either here or here. And the funny thing is, the beautiful thing of doing it this way is that if the market should retraces here and you see that candlestick pattern and you decide to use your stop loss will be very tiny. Let's say after maybe bullish and bearish engulfing candle. Let's say after bearish engulfing candle, maybe the candle close around this point, and you have to set your stop loss, and you put it here, and you put your stop loss here. You can see this is just 33 stop loss. When I set the stop loss here is 67. If you go back to the video, if you move the video back, you will see when I set the stop loss here, it is 67 compared to this 33. Okay, so that is the advantage. It gives you that small stop loss. And if it retraces to this point, the same thing, maybe the price closes around bearish candle closes here, then you have your bearish engulfing candle. It's still going to give you the same thing, and you can even move your stop loss a little bit lower. Okay, so if your stop loss gets hit here, for example, if your stop loss move and get hit, then you wait and see what happened thereafter. If you not see another entry again, let's say candlestick pattern that shows bearish movement, like bearish engulfing or something like that, or weak shooting star or something like that, sell. So that is how you want to enter. What's it called? That is how you want to enter. That's how you want to enter. Use your trend line. Okay, so you don't enter immediately. You enter with this. In the introduction, I said something when I was introducing. I said I don't use it often, and the reason is because if I remove it, it's more or less what I trade as if I move the trend line here, it is more or less what I trade as what I trade. Normally my trading strategy. So it's just price action pattern, then check my RSI, stuff like that. Still the same thing. So this is why I said most times I don't use it. Why sometimes I just use it just to see what the price is doing at that period of time. And then I want to see that the market has actually break and then show that this trend is no longer valid and then something is about to happen. So that give me just give me idea, give me clearer picture of what is going on. So that's why I use it most of the time. So so that's it. So this same thing that I just explained, the situation is the same for bearish market. This or bullish market, the situation is the same for bearish market. So I believe you understand. So let's look at this trend that is going on, this small bearish trend that is going on 4 hour. And if you decide to use your trend line, look at what happened after the trend line. Okay. uh Trend is always okay. Let's just do it this way. Okay, I think it's better like this. Touch as many points as you can. At least it's an area. Trend line is always an area. You may not touch everything, but perfectly, but it's an area. As you can see, this is 1, 2, 3, 4. So this is the trend. Okay. Now, if you decide to enter this trend, this trade after this breaks, after this green candle breaks, you can see the retracement that happened thereafter. Okay, you can see the retracement that happened. This retracement always happen because price won't just start going like that. Price will surely come to show you some kind of price action pattern. So if in this case now, you can call this head and shoulder pattern. This is the first shoulder, this is the head, this is the second shoulder. Okay, so you can see that happening here. So that is what you want to actually look out for. That is what you want to actually look out for. This trade we may still reverse. This trade that you're seeing may reverse because I think there is a gap here. This gap needs to fill. I'm not talking about fair value gap. Oh, this is not fair value gap. Uh, there is always when price jump like this one here. There's a gap. You can see price come back to fill the gap. So that is I'm not. This is not fair value gap. This is another type of gap that happens probably when there is news and price jump. So during the weekend, when there is news during the weekend and price jump, so it's always happen during the weekend. So you can see what I've just explained playing out here. Okay, so that is what you want to look out for. Make sure that you wait for the retracement that happen after the breaks of the trend line before you enter. Except you want to risk except you want to uh or except let's say you enter here, you want to risk 69 stop loss as the case may be, and then you want to hold this drawdown when it happens. If you know you can hold this drawdown, it is happening. Some people cannot manage their emotions, so you just have to wait. Before I round it up, let me show you another example briefly. There's one that where I use trend line recently, and I would like to show you. So come to, I think it's GBP. Yeah, GBP. Okay, so this is GBP. So I don't expect, even if this trend line breaks, I don't expect. The only reason I would take the trade if the trend line breaks is if I see something like this, because this is another thing. If this market continue like this, Okay, I see something like this here and it breaks, then I will want to take the trade. But I won't even wait if I see the double top already. I won't wait for the trend line to break, except my confirmation candle breaks is the one that breaks this trend line. Fine and good. But as soon as I see my confirmation at the second top here, I will take my entry and put my stop loss probably above here. Definitely. So this is what I will be expecting. So this is something that you should know as a trader. Okay. All right. So that is what I have to say in this video. So enjoy. If you have any question, please put it in the comment section. I will answer it. And if you want to join my mentorship class, check my bio. You will see my Telegram link there. You can send me a DM. And if you want to buy my course, it's in the description. So you can check it out. So see you next time.